Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market. In general, well, the level that we have identified yesterday for possible pullback in general, well, it has worked, so the pullback has happened, but unfortunately gold was not able to proceed higher. And we suggest that it might be from some indirect impact on the other markets. So for example, if we'll take a look at the major market for the gold, which is interest rates, I already have shown it in today's Forex video, you could see that this actually upper performance and tight standing around 618 level from the technical point of view put the shadow on the perspective of the bearish pattern. Now, I would say that if you could see on head and shoulders, which is potentially a bearish pattern, this type of action on the right arm, well, this is bad sign for this pattern, and which suggests that chances on the failure is really significant. Markets right now are waiting for CPI numbers, and whatever CPI numbers will be, well, they could make negative impact on the gold as well. So first of all, for instance, if we will see CPI slightly lower, it could mean that it could suggest that inflation is slowing down, and that theoretically could support the more activity from the Fed. If inflation is rising more, it's also suggests that the high interest rates should be, and also could make the negative impact on the gold. So it mostly will depend on how investors will treat the numbers that we get. So according to our analysis, we suggest that until by the end of the summer, the gold will remain under pressure. Well, performance here mostly suggests upward action, at least from the technical point of view that we have, which also makes pressure on the gold market. On the lower time frame, I also see some moments that makes me to stay side by for a while from taking the new long position. I will show you a bit later. First, on the daily chart, what we have on the daily, actually, as you can see, picture hasn't changed significantly. So market stands tight in the same area. But here I would say the one thing that actually we have the bearish engulfing, that it's still valid and hasn't reached the target. This is the first moment. Second, if market even will show some minor downward action, it will not be the strategy. So we could get the grabber maybe here around some support area. And in general, deeper retracements, it will not totally erase this bullish context. The market later could proceed higher into forming some compounding ABCD pullback. But in the shorter term, currently, I would prefer to wait for some more clarity on the bullish background that we do not have it right now. So on the hourly chart, recall our hand and shoulders pattern, right? So currently, we could say that totally has been cancelled. It's been erased. So because market not even showing the pullback out of the neckline and can't complete the target of this pattern, this ABCD, but also currently consider that the deeper lows have been formed and this ABCD pattern totally erased. So from that standpoint, this is not really very good picture for the bulls. We do not know what will happen, what numbers will be released, how it impacting the gold, but the technical picture, well, absolutely doesn't inspire me to take the long position right now. On the 4-hour time frame chart, other things that we have is take a look. First of all, here still some divergence exists, although it is not at some strong resistance or something of that sort. But still we have between two tops here is a divergence, which suggests taking out of these lows. The bottom between the two tops, how usual divergence, classical approach to trading divergences. Well, trend here stands bearish on the 4-hour time frame chart. Well, that's why personally, I think that it would be nice if we get some kind of the maybe even type of the butterfly action here to the 1820 area. Here's also we have inner ABCD pattern of the engulfing on daily that also supposedly has probably the target around this level. So if we'll take a look at this OP, where it stands, well, very close. So maybe not at 127, but around 1820, 2025. Well, forming of the bullish engulfing on a some bullish grabber on a daily, reaching of this support area might be, well, more reliable combination for considering taking the long position. But with the performance that we see currently, with the performance of the interest rates and with the CPI on the horizon, I don't want on Friday to take the new long position, guys, to be honest. Well, that's actually our view on the gold market right now. Speaking on the bearish position, well, with the performance on the daily and with the daily bullish trend, I don't want to sell gold as well. So in general, I am still watching for a possible continuation on the upward bounce, but I just suggest that it might start from the bit lower levels. So gold could show a bit deeper retracement before the second extension might starting. That's my common view. But I think that currently we do not have clear yet the signs of the purely bearish context. It has not been formed yet. So that's why I also do not want to take the short position by far. This is just my thoughts on current situation on the gold.